Uh, let's just come back to equities for a bit as well. The 12% provisional safeguard duty on 5 key categories of steel has come through. Remember, we spoke with the steel secretary recently as well. Nigel, tell us more. Largely in line with expectations?
Well, that's right. It's more or less in line, and it was almost anticipated by everyone that it'll come into play. To help us out with what you should do with the stocks from here on, we're joined by Amit Dixit, analyst at ICICI Securities. Hi, Amit. Good morning. Good to see you in. I was reading a couple of notes from Morgan Stanley. They said it's a welcome move. It's a positive move. It was on anticipated lines. But they're also suggesting if you get a bit of a pullback now, maybe you should consider lightening positions on the steel names. What is your call on these steel stocks, and what's your top pick?
Yeah. Hi, Nigel. Good morning, and thanks for having me on the show. Well, as far as the duty is concerned, the quantum doesn't come as a surprise. To be honest, it is well in the expected lines. Now, if you look at how the steel prices have behaved, how imports have behaved, they have actually behaved according to the textbook. Steel prices have gone up, imports have come off, largely because people were apprehensive of booking imports because the safeguard duty was almost certainly to go through. So I would say that the current announcement is more of a procedural in nature. Nothing changes on ground, to be honest. Now, what it does is that currently the steel prices that we see, if you look at the quarter-on-quarter difference, it would be, I mean, I'm talking about the headline HRC prices. The difference quarter-on-quarter would be approximately 4,000 to 4,500 rupees a ton. And that means a big EBITDA gains for the flat steel players like JSW Steel, Tata Steel. So clearly, it's beneficial for them from an earnings perspective. But going ahead, yes, currently the prices in India are at a level which is higher, even if you assume the safeguard duty in the global prices. So just to give you a perspective, we are actually 7% ahead of the landed price of imports from China, around 12% ahead compared to the landed price of imports from South Korea. Now, these are slightly worrying signs, I would say. So while nobody wants imports in the country, and therefore there could be a case where prices might pull back a bit. But having said that, Q1 is nicely set for the steel companies. Because, as I said, there is a gain on realization front as well as coking coal, and don't forget that there could be a benefit of roughly $10 odd to the steel companies' EBITDA. So clearly, from earnings perspective, a good positive. From a stock perspective, I would say that we will have to wait and watch, see how the import scenario pans up, because we are again entering in a zone where domestic prices are at a premium to the imported steel.
Right. Okay. All right. Domestic prices are at a premium. Got it. Amit, in the run-up to the DGTR announcement, steel prices had moved up. Post the announcement, actually, that's a month or so ago, pricing hasn't moved much, right? And Chinese steel prices continue to remain under pressure. Your observation?
Yes, so that's what I said, that what happened, that when these announcements were initially being contemplated, yes, the safeguard duty of 12% was a powerful deterrent. But now, even assuming or even subsuming the safeguard duty in the prices, we are running at a premium. So clearly, that doesn't bode very well for imports. So imports might just start increasing, so which is in nobody's interest. So that's why I said that there could be a case where prices could pull back a bit.
But you have been fairly positive on a couple of names, from the steel space. I think Shyam Metalics is something that you like, and I think one of the the Jindal companies is what you like. So could you tell us what is your top pick, and are you holding on to that rating?
Yeah, so we are holding on to that rating. As I said, that from earnings perspective, it's quite positive because prices, as I said, 4,000 to 4,500 rupees a ton, positive movement. Our top pick in the space is JSW Steel, followed by Tata Steel. In the smaller names, of course, we
JSW
like
Steel.
Shyam Metalics. So
Got
our
it.
target prices remain the same, and the ratings remain the same. We are quite positive overall on the space.
Okay, all right. What about the non-ferrous names? Uh, do you like anything over there? Because, Hindalco saw a big pullback. Valuations have become fairly good now. You also have Vedanta. There's a special situation playing out there. And it's been a very, very volatile stock. It corrected from 480 all the way to around 350, and now it's bounced back a good 20% from the recent lows.
Yeah, so non-ferrous is also, something that we like at this price point. In fact, we like both Vedanta and Hindalco. The issue though with non-ferrous is, as I've been saying, that this is connected with the global movement, global tariff movement. It's not a very local play. So we essentially like the local plays where the consumption growth in India would drive these stocks. Now here prices are governed on a global fashion. Only your premiums change, which are local in nature, but otherwise prices are mostly governed by what LME is. So that's why, relatively speaking, we are not. If you talk about relative preference, it's like ferrous versus non-ferrous clearly, but non-ferrous is also at a price point where one might consider Vedanta, as you rightly said, it at a very attractive valuation, even Hindalco. But Hindalco's story, we believe that it will gradually build up when they come up with the expansions and everything. In case of Vedanta, it's a more of an immediate, I would say, impact because of various cost efficiency measures that are going to flow in. Having said that, both the stocks look good. Just that from a relative perspective, we are more positive on ferrous.
All right, Amit, we leave it there. Good conversation and good perspective on metals and the steel space in particular.